Okay, welcome to today's market analysis. Today we're going to be taking a look at Bitcoin. We're going to be seeing, what the future trades might be moving into Friday as well as the weekend. We're also going to be analyzing some of the signals that's been given and see how they performed. So first things first, as always, just want to let you guys know I am giving this away for free. This is my very own trade journal that I use to plan my trades, document my profits, and anything of that sort. You see, when you're trading, you need to always plan your trades and trade your plan, and you want to get an idea of basically your thinking patterns. You also want to get an idea of, where am I making mistakes? Where am I falling short? Is my psychology what's letting me down? Is it my analysis? Is it my, mastery of risk management, etc.? You want to identify these things and, correct them. And this is exactly what this journal helps you do. It helps you document your trades. You can take notes, and you can also, document how you felt as you placed a trade. For example, how did you feel pre-trade? How did you feel post-trade? What were the mistakes? And you can sort of document your trade in a way where you actually improve week by week, month by week. Not month by week, month by month, and year by year. Okay, so do let me know if you want that. First of all, criteria, just hit the follow button, hit the boost button, and send me a message. You can either send me a message on my channel here, or you can also send me a message on Discord, and the Discord link is in the bio. All right, so next we've also got some exciting things coming on. So Trade Journal is hosting a bootcamp, which is where in the last Sunday of every month, we basically, decipher and, get into sessions in Zoom where we analyze charts, we potentially learn, the fundamentals of trading, liquidity, market structure, everything to do with trading. So if you want to get involved, feel free to have a look at this. It's on the website. So let's get straight into the action. Today's going to be quite a short one, simply because I haven't been trading very much this week. This week has been mental. It's been so busy. So I haven't been trading as much as I wish I was, but that happens. You get weeks like that when you don't place many trades, and you get weeks where you place, plenty trades, and you're scalping the market and you're gliding up and down the market. All right, but this is just one of those weeks. Anyways. So let's see, as of our last post, what were we looking at? Well, if we go back to the 8th of April, no, this is Euro USD. If we go back to our last post, let me see if I can find it. Okay, I think it was here. So our last post, we said we have this very clear range for Bitcoin. We have our range high at 73,752. And we have our range low at 60,921. We said all of this price action in between is internal play. And because it's internal play, price can go up, it can go down, it can oscillate within this range as much as it wants. We clearly identify that, we are in our premium section of the range as of this trade. And we said, well, we could potentially be looking to get a continuation up into the range high, or if we do start to mark down, we've got these areas, these zones that we could potentially get a bounce from. Okay. And we said that we did react off a zone there. It was a 24-minute zone that we missed, which we talked about in the last video. And that zone would have given us a nice entry, which I actually went through in the last video. So if you want to catch up with that, I think it's the actual last video I posted, so feel free. And then after that, we had a few more trades that we were looking at. We said we were looking at a potential scalp long. And why were we looking at this? Well, we were looking at this because we reacted off that 24-minute supply. We had a nice second entry here, wicked in the first time, wicked in the second time to sweep the first wick, change in market structure, continuation down, followed by a stream of lower lows and lower highs, which is great. And then we said, well, we're coming into this old demand range, and at this old demand range, we want to get a reaction. Did we get a reaction? No, it broke straight through it. But then we said, right, there is a 1 hour demand underneath. And could we get a reaction from this 1 hour demand underneath? Market Cypher was giving us a beautiful bullish divergence, suggesting that we could get a rotation up. But we said we're not just entering this trade based off of market structure, based off of market cipher. Why? Because look at these bear trend bars. These are quite aggressive bars. Whenever you get aggressive bars like this, you need to be a bit apprehensive. You can't just jump into the trade thinking, well, it's going to react. Well, that's not what the price action is telling you. The price action is telling you you're having high volume sellers step into the market. Okay, so to get a quick reaction as a result of that is unlikely. Doesn't make any sense. So we said we're being patient. How are we being patient? We're being patient by saying we're not entering alone until this level is broken. But why this specific level? It was this level because that was the last lower high, in our markdown. So we had lower low, lower high, lower low, lower high, lower low, lower high, lower low, last lower high. And we're looking to break that lower high before we get a reaction. All right. And then we said very clearly here, no break, no trade. If we don't get a break in structure, we're not entering that trade. All right. Now let's see how price played out. Price did come slightly, a bit lower. We're going to talk about why in a second. Price did come a bit lower before we got that change in reaction, that change in direction, but we still did get that change in direction. So let's take a look. So if we play that out, so we had a sweep of the low into the 1 hour demand. We had, this markup, steady markup, not a lot of structure here. And then what happened after that is we reached that level, but we didn't close above that level. We wicked that level. We came back, we produced what looks like a Trinity Model 2. We attempted that again, all right? So we wicked it for the second time, right? And the third time, I'm not sure what time frame is this, but on the third attempt, on this time frame, it does show that we closed above that level slightly. But this was only slightly, but not only was this not a valid close based on the way I trade. In order to see a close here, you would have needed to see this high get taken. Okay, as soon as this wick set, this would have been your new high. And obviously this is something I teach, and this is something I tell all my students to follow, but it's not something I've personally released on these streams / this lesson. So if you were looking at that as your break, you would be wrong. And the reason being is because this is a wick. Because it's a wick, this changes things. This means the new high and the new level to break is up there. Okay, so really and truly, I'm sure some people would have thought, oh, breaking structure, great. They would have waited for the retracement and entered about here. If they entered here, chances are they would have got stopped out. But now, if you are one of my students, you will realize that this is not actually a break. This is not a valid break. So we need to wait for that valid break. What did price do? Well, price continually marks down and price went bang. All right, so why did price go bang? We still haven't had that level being broken, right? Well, obviously it got broken over here, but why did price go bang? And not only should you be asking yourself, why did price go bang? Why did price stop over here? Why is this the point where price stopped? So we're going to be talking about that today as to why price stopped over there. So we're going to use the bar replay tool. This should take us back to where we were. This is the level we were looking out for. And there is another thing I missed. This is slightly alarming because a few days ago I missed that 24-minute demand, and look, I also missed a 12-hour 24-minute supply. I also missed a 12-hour demand. Okay, so we missed this 12-hour demand. And I was saying just now, why did price react at that level? Well, that's exactly why. Price reacted off that 12-hour demand. And look what it does. It literally came in, had a sip, and then bounced up. Look at that reaction. Boom. Okay, so that's why price reacted off that level. You see, for years and years and years of trading, I've traded every method. I've tried every single kind of method you can think about. All right. And nothing really made sense until I started trading supply and demand, and until I started, trading market structure properly. And so this is why I share, my trading strategy is primarily based on market structure, then supply and demand, then liquidity. And I find that is the most logical way to trade the markets. Years ago, about 5 years ago, I wouldn't know why price reacted off that level. I just wouldn't. I would say, well, it's reacted, cool. Let's get into a trade. I wouldn't know why, but there is a reason. And the reason is this 12-minute demand. All right. So let's zoom in. So obviously we were at that level. We had that 12-minute demand that price reacted from. If we go to the lower time frame, Now, if we draw our structure on the way down, where was the last high we were looking for to take out? Well, I'm just going to start from here. The high we were looking to take out, the last low high we were looking to take out was this level over here, this one here. All right, we said we wicked it, so we didn't quite break above it. Now, before we enter that trade, we need to see a break. We need to see a clear break in market structure. So as we wicked into that supply, let's see what happened next. Into that demand. You know, I keep getting this wrong today because I am quite tired. In case you haven't heard in my voice, I'm quite tired today. But I thought let me put this out there because I'm sure some of you are waiting for the next update. So here we go. So this is what price did. So price marks down again, you know, dips deeper into that 12-hour demand. Okay, and at this point I'm thinking, oof, are we gonna break straight through that demand? Are we gonna burst straight through that demand? Okay, but if we do not, we are printing very, very, very nice and juicy bullish divergences. Right, look at that. We had our first bullish divergence there, price going down, momentum going up. We had a bigger bullish divergence here, price going down, and our momentum going up. Yeah, so something like this. So if this prints out as a nice green dot, we're looking for a nice long there. And the beauty about Market Cipher is, now Market Cipher, it's just a predictor of turning points. That's all it is. I use Market Cipher B to predict turning points, and it is golden. It's actually golden. So let's see if we actually do get a turning point there. Let's see what price does. So yes, price doesn't quite break through the 12-minute demand, the 12-hour demand, another mistake. All right, the 12-hour demand. What does price do? Well, price starts to come up. It starts to mark up. And we're waiting for this level to get broken, of course. That's still the level to break. And yes, we broke that level. So as soon as we break that level, let's see what price does. Price breaks. Price comes back in. You know, that potentially was the retracement. All right. So if you're looking to enter a long there, where would you have entered a long based on what we teach here? You would have entered a long right there. Okay, so that's where you'd have got that entry. Where would you have placed your stop loss? Well, if you wanted to be, if you wanted to play this one with the utmost and utmost, if you didn't want to risk too much, basically, you would have probably put your stop loss around here, and you would have watched the market structure closely to see whether you got a flip. But if you wanted to, you know, play it by the books, theoretically, you'd have to put it down there. Okay. Now, let's see how this played out. So it continually went up, it marked up, and we're printing now higher highs and higher lows. All right, so this is good. We're breaking market structure on the way up. The moment we see a change in market structure on the way down, that's your signal to get out of that trade. If this level is broken, get out of that trade. Okay. All right. So what do we see here? So we see a break in market structure. Where is that break? Well, if we continue up, we've got high, high low, high, low. So our next break, our level to look out for in order to get out of that trade is this level here. Do we break past that level? Yes. Okay. So that's where I would have exited that trade. I would have exited that trade to prevent, you know, any further loss. You know, and yes, that takes us to where we are right now. Okay, so I would have been out of that trade actually, and I'm sure some of you are still in that trade, which is fine. You know, we've got a bearish change in structure. It could flip bullish again, but based on the way I trade, I'm out of that one. Yeah. All right. So now where are we? Where are the next levels, and where are we looking for our next trade? Well, to do that, we have to understand where we are. Globally, if we look at the 4-hour, we can see that we're in this beautiful range, right? We've had a range high, range low, and all this internal structure. But you cannot miss the fact that we've set a low, and we seem to be creating, you know, we seem to be creating higher highs and higher lows over here. Higher highs, higher lows, higher highs, we change market structure. Okay, then we SFP, we break again bullish, high, high, low, higher high, you know, higher low. Now, is this 12-hour demand a reaction to take us up to that range high? You know, that's a potential idea you have to be aware of. And if that is the case, we're looking to get a rotation of that level at least. If we break through it, that's a different story. We'll deal with that when we get there. Yeah. Okay. So that's one trade idea that we're looking out for. Now, what you can't miss is you can't miss this liquidity that's building up. You've got this nice trend line of liquidity that's building up over here, and you can't miss that. So we've got a nice trend line over here, okay? And why is this a nice trend line? Well, because it's been respected once, it's been respected twice. Is this gearing up? Is this gearing up for something like this where we get tighter and tighter and tighter? SFP, is that what's going to take place? Well, we're going to see. Excuse me. Well, we're going to see in perhaps a few days. Okay. So what else can you not miss? Well, you cannot miss that if this is a range, which it clearly is, we have our discount region, and we have our premium region, and we have our discount region. Okay. Mistake number 4. Yeah, today's a crazy one. But see what I do for you guys, you know. Even though I'm not feeling too well, I come on stream and I give you guys the juice. All right, so we've got premium over there, we've got a discount over here. All right, now this is why I'm apprehensive. Why am I apprehensive? It's because we are bang in the middle of that range. Yes, we're slightly in premium. Yeah, that's fine. We're slightly in premium, but you know, I am apprehensive because I don't like to trade in the equilibrium line in the middle of my range. So I am waiting to see what happens as we approach this level. Now, in the case that we continue to mark up, you know, we create a low, we create another high, and we'll create another low before that. I'm going to be looking, do we sweep this level? And if we do, are we going to get a break in market structure after? Then are we going to get a retracement? I'm going to write that down. That's my plan. That's my plan at the moment. Okay. Now let's take a look at what's going on in terms of the volume. In terms of the volume, if we take our volume profile for the entire range, we can see that we've had our value area high. We've broken out of our value area high, and you know, we've come back in. You know, we've not come all the way down, and we're kind of getting a reaction again off the value area high. All right. So let's see, if we do break past this value area high level with a decisive close, then I'm thinking, well, we're probably coming up to take, you know, these highs. All right. And if we don't, then perhaps we're getting a rotation all the way down. All right. Now, another thing to pay attention to is, you know, a global time frame. What's Bitcoin doing? What has Bitcoin been doing so far? Bitcoin has been on a tear up. Bitcoin has been on an absolute tear up. If we start from the monthly, we can see that we've had a very, very, very aggressive move up. You know, we've actually closed on the monthly above the prior all-time high, and we're looking to see, are we going to get acceptance back into that all-time high, or are we going to have kind of a pause bar, which is going to be broken up further? Where is our weekly level? If we take a look at our weekly level is still here at 38,830. Our daily level still sits at about 50,119. So those are levels that we have to be wary of. All right, those are levels we have to be wary of. In case we do break bearish out of this range, those will be our next levels, our next targets. All right, but what is Bitcoin doing? Well, Bitcoin loves to break out, accumulate, break out, accumulate, break out, accumulate. That's what it's done so far. Accumulation, breakout, accumulation, breakout, accumulation, breakout. Is this one big accumulation for that juicy breakout? Okay, or is this a distribution that's gonna topple down? All right, so we're gonna look out for those. But I'll be honest, guys, this week I've been extremely busy, and so as a result, I'm not giving out too many trades at the moment, and I'm just watching for this big one, and I'm watching to see what happens as we approach that region. Now, perhaps if we come close to this trend line again, I may look for a long. I may look for a long, and I look for confirmation on that long, a change in market structure bullishly. But I'll need to be careful with that one. Why? Because we'll be bang in the middle of our range, the equilibrium of our range. Okay, so we do need to be careful with that. So I think today that's it. I'm waiting for that trade. Now, if you did want something short term, if you wanted something, in the midterm to sort of get busy with, you can see that we've obviously got another range here. Now, what does that mean? That means we could get a sweep of that range high. You know, we love to trade ranges. We could get a sweep of that range high. So that's another area to look out for trading if you're looking for a long. If you're looking for a short, perhaps down here. All right. So there we have it. That's the update. Otherwise, I will see you tomorrow.